Disruptors, I want to welcome you to another episode of Close the Deal podcast. This is a special episode of Franchise Profits. If you've ever battled with your insurance company for a claim on your home and you didn't get what you deserved, you may want to listen to this show. If you're in the middle of that battle right now, we've got a solution to that problem for you as a consumer and as a possible franchisee. I want to bring in Ted Patestos. He is the CEO of Tiger Adjusting. Ted, welcome to the show.
Yo, I appreciate you taking some time to speak with me today.
Man,
Super close on the last name, by the way. It's
yes.
95% there. Yeah.
Yes. My name's Smith. You got that? We just had, I know your background is Greek, so we just had our Greek festival here in New Orleans, which is, we go from festival to festival to festival, and that's the last huge one was the Greek one. So, and that's the name, the background of your name. All right. So if I'm coming to New Orleans, I'm coming from New Orleans to visit you. I'm driving there, or you have another client coming to town to visit with you. Where are you taking that person to close the deal if the intent of that dinner or lunch is to do business?
Man, I'll tell you, if you'd asked me that like 7 or 8 years ago, I'd have to tell you Chuck E. Cheese because I didn't have any money, but we've done pretty well since then. And so it's got to be either Steak 48 or Killin' Steakhouse in Pearland, Texas, which is right outside of Houston.
You have a special cut you like, you personally?
Yeah, I'm at Wagyu stage at this point, so I'm enjoying it. Yeah.
Oh, well, there you go.
If we're doing client deals, it's got to be Wagyu all the way.
My favorite question I ask everybody is, who or what are you grateful for that helped you get you where you are today?
My wife, unquestionably. So wife and God, but tangibly, 100% my wife.
Awesome.
So, we met about 10 years ago and, I'm originally from the East Coast. She's actually the reason I moved down to Texas. She's from a suburb of Houston called Friendswood, Texas.
Mm-hmm.
And, we were dating for a while. She was up there at college. And when she graduated, she said, look, man, I hate the East Coast. All right, I'm over it. I'll give you 18 months. And if you're coming, you're coming. And if not, nice to know you. And so I made the move down to Texas, and it's been nothing but forward progress since then. So she's definitely my rock.
I love it. All right. So let's start unpacking what Tiger Adjusters does. So you address a problem that many people along the Gulf Coast, anybody in New Orleans, have battled with their insurance companies after, and it goes, from my memory, it goes back to Hurricane Katrina. And so many people have had nightmares dealing with their insurance companies, trying to figure out, the one insurance company is blaming it on the wind, the other is blaming it on the flood. A person in between, the customer or the consumer, gets kind of screwed. And you help solve that problem in a significant way. That's the problem you identified in the marketplace. How did you decide, okay, that's what we're going to do, that's how we're going to solve this? We're going to go out there and find a solution?
To be honest with you, I didn't plan to get involved with this. My original co-founder and myself, Stuart Severino, is one of my co-founders. I left corporate and went out to start my own thing. I have a lead generation background originally, and I linked up with Stuart. We started a marketing technology and lead generation company first, but we catered to contractors of different verticals, different sorts, and ended up with some public adjusting clients. And that was in 2020. COVID hit middle of 2020. The world kind of flipped upside down. Some of our public adjusting clients reached out to us and said, hey, instead of doing fee for service up front on the leads, we'd love to do like a fee split. We've got all this stuff going on. And we said, all right, we're open to that. But legally, you can't split fees with public adjusters unless you have a license. So we ended up thinking about it a little bit and then decided, I went out to go get the license. I got the wrong insurance license. This kind of speaks to one of the problems in the industry. But I got the wrong insurance license and ended up working for Allstate for like a little over a month and learned kind of what it looked like on the back end with Allstate. Came back out after a month, got the corrected license, and then Stuart and I hopped in the car. We drove out to East Texas, little kind of city called Beaumont, and it was on the back end of the 2020 storm season. And man, we just got into a red roof bin and picked up the phone and started reaching out to some of the leads we had generated and took off from there.
What does a so people may not be familiar with the term public adjuster. Everybody knows what their insurance adjuster is, and they're not, you
Yeah.
know, they come out there, they act like you. Some of them act like they're your friend. They try to help you, but some of them are just not very nice, and you really kind of get screwed. So you tell us what you do as a public adjuster. How do you balance that
Yeah.
equation?
Yeah, so I think you're 100% right. So most folks know what an insurance adjuster is because almost everybody has some form of insurance, and you file a claim and that's going to end up with an adjuster on it. So a public adjuster at the highest level, what a public adjuster does is they come in and they represent the policyholder as an advocate for that policyholder during the insurance claims process. So whether you're a residential homeowner, you're a commercial property owner, or you're a business owner, public adjuster will come in and represent you during that claims process. And they can come in at any point during that process. And so whether you've filed your insurance claim, haven't heard back in 2 months, and you're like, what the heck is going on? Or you filed the claim and they're telling you they're going to give you a check for $7,000 and the contractor's telling you it's going to be, $80,000 to fix it. Or, you've got a denial and you just feel like that's an erroneous denial and you actually have coverage for it and you don't know what to do. Public adjuster can help in all those instances.
At any stage along that process,
Yeah, that's
up until you've probably accepted a check.
even after you've accepted a check.
Oh,
It's a common misconception. If you've received a check, we call that undisputed funds in the
okay.
industry. So let's say you filed a claim, you got a check for 7,000 as an example, and you just know that it's not enough. You can go ahead and deposit those funds,
Mhm.
utilize them for whatever you need, bring a public adjuster on and still fight for, the remaining amount. You can even open up a claim as a public adjuster, reopen a claim technically up to 2 years later, but we don't do because it's just not, it doesn't serve the consumer. The
Mhm.
information's really stale. So all the way up to really 8 to 12 months later, you can reopen a claim.
That was going to be my next question.
Uh,
Wow, 8 to 12 months, I would think once they accept that check. It's kind of like the truck commercials. Don't accept the quick check, you know?
Right.
So in
Yeah.
this case, you can actually go after the check. Wow, that's
Yeah. Absolutely.
so you filled a gap in the marketplace. Talk about I mean, a lot of people don't know what this is. So let's talk about how you address that.
Yeah, so I think that the way that we approach the marketplace is entirely different than what the legacy industry, if you will, on the service side, how they've approached the market. And I think that's the part of the reason why we've been able to be the first to actually franchise in the
Mhm.
space. And that spoke, the franchising model works exceptionally well for public adjusting. Nobody kind of did the work in order to get it there and systematize and create replicatable processes. And so we're really thankful to have been able to do that and solve for scalability, which was a massive problem in the space. But on the consumer awareness side, coherent branding, kind of the par for the course marketing benefits that you get with almost every franchise system with a coherent brand,
Mhm.
national footprint that lends to credibility and legitimacy to the consumer on the B2C side. And then, as a franchise, building unique relationships with the franchise systems that are sort of insurance adjacent where we're not a competitor, but we actually add significant value to those franchise systems.
Why wasn't this done before? Why hasn't this been done before, I should say?
Theories, I couldn't tell you for sure. I think this is a lucrative business. So the cost of acquisition for an insurance claim is almost unquantifiable, right? When 2/3 of the business is B2B referrals. So it
Mhm.
comes in from relationships that have been built. And so you're not necessarily spending a bunch on marketing.
Mhm.
And so the cost of acquisition is super low, but the ticket prices are exceptionally high. So,
Mhm.
on a residential claim, if you Google around, you'll see like on the internet, it'll say, oh, the average insurance claim is like 17 grand. I don't know if that's true or not. I can tell you that our average claims are closer to 51,000.
Whoa.
And so when we're signing a claim, on the low end of the ticket price, if it's a residential, we might be dealing with somewhere in the range of, you know, maybe 3,000 to $3,500
Mhm.
on the fees. And on the commercial side, I mean, there's I'll say the sky's the limit almost, you know what I mean? And
Mhm.
so think what that did in the industry is that bred a lot of complacency,
Mm-hmm.
because you can be a chuck in the truck and you can go and you can make 750,000, $1 million in fees. Okay. And your overhead is so low that, now you get addicted to making, six or 700 grand of that directly into your pocket. And so that sort of environment breeds complacency. It doesn't necessarily support innovation.
So how does it work? Let's walk the customer through it, the person who needs the service, so they understand how this works. How do they get in touch with you, or do they, or they be connected, like you said, B2B referrals?
On the B2C side, so if you're a true consumer and not just, a insurance adjacent vertical, the way that folks come in is really disproportionately two ways. One is they will come in because they're experiencing a real problem in their own claims process and they're experiencing frustration as a result of that. So they don't even necessarily, they're not Googling around for public adjuster. They're Googling around for you know, insurance claim help, etc. And they'll stumble across public adjusting as an industry. At Tiger Adjusters, we've taken some really significant steps to dominate in the digital space. So, I mean, it's specific to our brand. That's how we bring in B2C. And so it's really organic search where we see a ton of stuff come in on the B2C side, right? I can talk a little bit more specifically about how we position ourselves at Tiger Adjusters.
Mm-hmm.
That's industry wide.
Mm-hmm.
The other way is that when you service a consumer and they sign up with a public adjuster and they go from 10 grand to 60 grand, 120 grand, 180 grand, because these are real numbers. This is what's actually happening on the ground. When that happens, first of all, they're ecstatic, right? I mean, they think that they don't know how it happened, but they know that it happened. You're delivering a check to them. And in some cases, it's saving their home. In some cases, it could be a life-changing or a life-saving event without being overly dramatic. But those folks become the people in the know. And so word of mouth referral in those instances really drive a lot of B2C attribution for us. So when someone ends up with a really favorable outcome like that, as soon as somebody else in their general network kind of starts to experience an insurance claim, it's an automatic, hey, think about using a public adjuster, right? Because they saw such an increase relative to their baseline on.
Okay, so now, so the consumer, when they find out about you, they come in, public adjuster goes to their house. It's just the analysis in reverse in favor of the homeowner is basically it.
In essence, yeah, I think you kind of hit the nail on the head there, right? So they'll pick up the phone or submit a form fill. We'll connect with them. We'll set an inspection time. The virtual assistants will, and we'll say that inspection time goes on the books. Public adjuster, or what we call field inspectors in our industry, which are not necessarily licensed, will go out, conduct the inspection, document the loss, taking photos and measurements. Sometimes that person will write an estimate. Sometimes it's passed off to someone else to write the estimate. We use the same software as the insurance carriers use. So we're having an apples to apples conversation. To your point, we're giving that loss an earnest look. We're reviewing the policy, taking a look at within the policy, are there any kind of nooks and crannies, call them sub-limits, and things that might apply that aren't necessarily kind of surface level stuff. And so we identify what that universe looks like. We write up that estimate. We have a letter of representation. So it's a contract that's executed by that homeowner or that policyholder. That gets submitted along with our estimate over to the insurance carrier. And then we begin managing the communications directly with that insurance carrier on behalf of the policyholder.
Mm-hmm.
And then we go out and we will push for what's called a reinspection most times. Sometimes they pay out right away. Sometimes they don't. And we'll push for a reinspection. And then we'll go back on site with that insurance carrier adjuster with our estimate in hand, pointing out all of the stuff that needs to be covered or was missed previously. There's a negotiation that takes place. Sometimes it's in the field. Sometimes it's through email or on the phone, right? Remotely with what's called a desk adjuster, somebody that works for the insurance carrier. And then generally what will happen is there's something called a supplement payment that's issued. So this is now a payment that's issued from the insurance carrier based on what we've submitted. And, I'll give you an example. Let's say that they kind of started out, I'm going to use round numbers, started out at 10 grand. We wrote an estimate for 100 grand. These are just arbitrary numbers. we're going to go through that process. And the insurance carrier might say, all right, you're right, man. We missed a bunch of stuff. We're going to issue you a payment of, 35,000. And we think that'll take care of it. And we're saying, well, that's definitely a step in the right direction, right? But you're still about 50 grand off. And so what we do is we actually make an assumption internally. We have a formula that we apply. And we do this for our franchisees where we're projecting out based on historical data what the likely payout is on an individual claim relative to what's been written. Because the reality of this industry and the reality of public adjusting is that there is a conversation and negotiation that's happening with the insurance carrier. We're not in the business of getting, even though the goal is to always get you everything you're owed as a consumer, that's not the practical aspect of the business. So on the practical side in this business, we're in the business of best possible outcome or the least bad outcome for the consumer. In other words, if you started at 10 grand and you're really owed 100, there's a certain tipping point where when we might get you to 65, 70, 75,000. And at that point, the insurance carrier says, you know what, we're done. If you don't like it, we'll see you in court. And then it becomes a conversation with the consumer. What makes most sense for that consumer based on their financial reality? What's going on with their home? Are they displaced, et cetera? And, and whether or not they want to go after that final dollar. But 75 grand is a heck of a lot better than 10 grand.
Absolutely.
And so that's the business we're in.
Now, you mentioned commercial work too. So I can visualize it easily as a homeowner. But I also think about my former chairman with the last hurricane, his freezer. He has one of the largest seafood processing facilities here in New Orleans. And his insurance, he had like a $900,000 claim on his insurance because his freezers went down. All the seafood in the freezer went bad.
That's right. Yeah.
And they didn't want to pay. Do you do that kind of work too? Does it cover the spectrum as well, or is it just physical property?
Yeah, that's a great question. So we call it business interruption.
Okay.
And so we do business interruption claims.
Mm-hmm.
The way that those claims work is it's more of almost like an accounting. So if you, as a business owner, everybody's pretty much familiar with like a P&L, right?
Mm-hmm.
And so what we're doing is we're looking at things like within those sorts of commercial policies, we're looking at, actual profit margin compared to top line revenue costs, because that's what's going to be covered by the insurance. We're looking at extra expenses, that are also covered under the policy. So in the example you gave, they might have said, well, hey, we've got 90 minutes to get, these crawfish on a cold truck, and so we're going to have to rent some cold trucks in, and get them to switch over some inventory before we lose everything. I don't know if they did that or not, but that would be an example of an extra expense, right? Throwing that inventory out. So you've got coverage on the inventory itself, on the margins, and then throwing the inventory out, actually removing that, you're going to incur additional expense for debris removal. And that's another example of something that's covered under those business interruption policies.
Okay, well, that's good to know, because that opens up so much other business than someone just thinking of the home. All right, what is this? Let's unpack this now for someone considering a franchise. What's the day in the life? What does their life look like doing this for a living? A franchisee.
Yeah, so I think that it depends on the operator. Right? Are you going to be a true full-time owner operator, or are you going to be, you hear it in franchising all the time, like semi-absentee. I hate the term. Okay. I prefer passive, like semi-passive. The reality is, I think if anybody's selling you a business and telling you never have to work on the business, then I would run the other direction. So, but if you're an owner operator, you're going to go out, you're going to be, this is primarily what we call a paper business. So 80% of the business is run off of the laptop and the phone. And so we don't require Tiger adjusters. It's a home-based business. We don't require you to get an office space or anything like that. There's no build out, no wrapped vehicle if you choose not to get it. And so day in the life of is, you're going to wake up, you're going to check your emails, kind of check your operations dashboard, see what's going on. If there's any updates on your claims, we have some automations that are built into our system. So a lot of stuff gets pushed along. You're going to go to maybe your first inspection of that day, engage with a consumer, poke around, document the loss, take your measurements and your photos. You might have a re-inspection scheduled that day, which is going to be with that insurance carrier adjuster. You might have 2 or 3 of those in a day, right? You might be going to a number of inspections. couple of re-inspections, depends how busy your schedule is for that particular day. But you're going to go back to the house. You're going to get either you're going to be using our internal estimate writers and kicking stuff to them and getting them to write the estimates for you, or you're going to be writing the estimates yourself if you have that experience and that training. Those are going to get submitted to the carrier, and you're just going to be pushing paper, man. You're going to be doing email follow-ups or having your administrative assistant do email follow-ups, scheduling. Checks come in, you've got to get those checks out to the consumer. One thing that's probably pretty interesting for folks is that as a public adjuster, we end up as co-payees on the settlement check. So when you're a roofing company or you're a restoration company, a lot of times what happens is those checks are going direct to the consumer. Okay.
Mm-hmm.
And so now you're chasing your money. Right.
Mm-hmm.
And so it's great to have, man, I've got $400,000 in the accounts receivable pipeline. And that's great on paper, on the balance sheet.
Ooh.
But when you got to chase that around, it becomes a challenge. And so for us, we're on the checks as a co-payee, meaning Tiger Adjusters and the individual franchises on the checks. And those checks physically come to us first.
Wow.
So we're in control of those proceeds.
That's huge. No accounts receivable.
And so that's pretty much the end of your day. I mean, I don't want to oversimplify it.
Right.
There are instances where, you're on the phone and, if you're working the business yourself, you're on the phone with an adjuster, let's say for State Farm, and, in the face of all evidence, they're just like, yeah, man, I just don't see it. And you're like, oh, what do you, there's a car in the middle of the living room. What do you mean you don't see it? And so it can be frustrating at times. They're not just giving it away, but what I will tell you is that, when we sign up a claim, well over 90% of our claims result in a supplemental payment without them ever going to legal. So 90% of the time you're seeing payment increases on those claims and they're turning in from paper documents into, paper checks.
And what I'm hearing is it's really yourself, the franchisee, and maybe an assistant to get started. How big can this scale to for somebody? Can he build a team?
Yeah. So our Philadelphia operator who, his first full year in business was 2024. He started like end of 2023.
Okay.
First full year in business, 2024. He's got 3 territories. So it's a population of about 1.56 million. He's got all of Philadelphia County. He has now, in his second year, began to scale relatively significantly. But what's I think really cool about this model is it's not like restoration when you hire a labor tech, okay, you're paying hourly. When you bring in, labor for installers, you got to keep them fed. Otherwise they're going to jump ship. We don't have that here. When you scale up and you bring people on, I mentioned a field inspector earlier. When you bring that field inspector on, that's fee for service, man, 1099. You're only incurring a cost with respect to labor when you've already signed a claim.
Yeah.
So that's a really important aspect of the business.
So let's talk about the investment level and the revenue side. What is the investment level to get into your business? So you're a franchise.
So in the FDD, our investment range is just over 43,000 and it goes all the way up to 159,000. There's this huge delta. And the reason is because, of course, we do everything that we strive for compliance, right? Of course. And so in the FDD, you're required to disclose things that are otherwise kind of optional, not required, right?
Mm-hmm.
So that investment range includes the franchise fee, but it includes a $50,000 line item for a truck, right? That's not a requirement. It includes, I want to say, roughly $10,000 to $12,000 for an office, not a requirement.
Mm-hmm.
It includes 3 months of what we're calling working capital. But in the first year of our system, there's no minimums, and so the true overhead, outside of gas tolls, like your own personal bills and probably and Wi-Fi, we're really focused on kind of a low overhead model. And so I don't want to talk about the true effective cost. I want to stick to what's in the FDD, but that's what the range is in the FDD.
Understood. And then how about the revenue side? What does that look like for people?
So, we have an item 19 in our FDD, and, it was really important to us to include, I'll be honest with you, man. We started pulling FDDs from other systems, kind of looking around and as a business owner, I want to see the P&L, you know what I mean? Like, I'm not interested in I'm from New Jersey. And I said I'm from the East Coast. I'm not interested in your fugazi numbers, right? I want to see the profit and loss statement of the opera. What's going on? And so in our item 19, we've got profit and loss statements for at least two. And so referencing back the Philadelphia operator, who was the first we were able to get his first full year of business in there. So he did 861,000 and change in fees, right? So when I say fees, let's say that you've got a $100,000 insurance claim and you've got it at, 15%, right? And you made 15,000 on that. 15,000 is fees.
So it's $861,000 revenue to him.
In actual income, that is correct. Yeah.
Okay.
And so out of that 861 and change, after expenses, after royalties, and after some add backs to account for his trips overseas that he started taking, he ended up at just over $655,000 in net operating income.
Wow. You know what? That's solid. That's really solid.
Well, I'll tell you, it's solid. But I think that the other thing I'll tell you is that it's also cash basis. Okay. So there's a whole universe of accrual that we don't talk about. We don't talk about that accrual bucket because it's not in the FDD. So we can't reference it. We can't really speak to it, but it was important for us to include cash basis numbers because if you're running your numbers in a P&L off accrual basis, it's not a fair reflection of the true health of the business. So you can have, it goes back to the accounts receivable bucket with some of those other companies where it's like, you could have $500,000 on the balance sheet all day long. If you didn't collect that money, I mean, what are we talking?
Exactly. No, that makes all the sense in the world. I love it. Someone considering a franchise. This will be we're going to land the plane right here. Someone considering a franchise. What's your number one piece of guidance to them, whether it's your brand or any other brand? What do you tell them?
Man, you got to go fundamentals. I think it's like a basketball. I feel like it's a basketball coach saying, you got to stick to the fundamentals, right? You don't want to ever go in with like rose colored glasses, right? Like in my experience, and maybe I have a unique experience, but I don't think so. Like in my experience running a business, everything doesn't go 100% to plan. That's just not reality. And you can prep for it and you can mitigate and you can pivot and you can be an excellent operator. You can be all those things and things still aren't going to go to plan. You're just better at coping or dealing with those things and making sure that the business is healthy. So when I talk about fundamentals, man, it's about what does that month over month overhead look like? What's it going to look like in a down month? I'll give you an example in our business. I mean, you might sign, 40, 50 claims in a month. And then the next month you're going to sign 8 claims, 10 claims. After that, you might sign 35. When you have fluctuations in top line revenue, it's okay if your cost of acquisition is super low, your ticket prices are relatively high, and then super important that your monthly overhead is low. Because you know what? If I do 10 claims in a month and I'm pulling in 25,000 in revenue, but my nut, so to speak, is like $3,000, you know what I mean? If I've got an $18,000 nut, now I'm stressed, dude. Now I'm anxious, right? And then when I have in our example, a 50 claim month or a 30 claim month, and there's $100,000 revenue month, right? Or fee month, you still got that, within reason, the same overhead. Maybe it's 5 or 6 because it scales up with what you're incurring, but it's proportionate. And so that's what I would recommend to people is focus on the fundamentals.
Well, Ted, I appreciate that. Folks, if you are interested in getting into a business that actually really helps people dealing with probably one of the most challenging things they face. It's highly stressful. I've been there. I know the drill. If you'd like to get into this, get in touch with me at yourfirstfranchise.com, yourfirstfranchise.com. Hit the contact us button, set up a call, and we'll be in touch right away. Ted, I want to thank you. This has been fantastic. You're providing a terrific service, helping a lot of people in a time of need.
I appreciate the time, Mule. Thank you so much for having me on, and I look forward to our steakhouse meeting. Hopefully I can get you out here to Houston. We'll see.
Man, it's only a 5-hour drive or hour flight. I appreciate it. Thank you, man.
All right. Take care, man. Appreciate it.
And that is a wrap with Ted. And anyone who's ever fought with their insurance company, fighting for the money that you pay good money to for years to have an insurance policy, and then you got to fight for it. Well, that's why these guys are there. And that's why this franchise model is gonna do pretty well. like to learn more, get in touch with me. Like I said, yourfirstfranchise.com. And when you visit yourfirstfranchise.com, I'd also love to gift you a copy of Your First Franchise Roadmap. And this book, I answer all the questions on how to get going into franchising, be it this franchise or any other franchise. It's a great start point for you. So check it out, yourfirstfranchise.com. I want to thank you for being here. We're providing free content, the free book, the free podcast. Do me a favor, hit like and subscribe, hit the bells, give 5 stars on Apple. All those things do indeed help. And the people that make it to the end of any Close the Deal show, you start out as disruptors and you finish as closers. And we appreciate you. Appreciate you being here for the show and being part of our community. And you know the drill. Be intentional and make today a great day. Bye-bye.